Hi, and welcome to the Stock Scores Market Minutes for May 16th, 2016. This week, let's talk about how it's important to not fight the trend, but the trend that you trade. And it really comes down to that time frame that you are focused on. Now, buying against a downtrend is a losing game. We want to wait for rising bottoms to form, start to break the downward trend, and build optimism. Focus on the trend that matches your trading style. If you're a day trader, looking at the trend on a weekly chart really isn't relevant. By the same token, if you're a longer term investor, looking at strength that happened over the course of 1 or 2 days also really isn't relevant. A long-term trend could be down, but there could be a short-term uptrend that is very tradable for the person who trades that time frame. We want to keep these trends in context. Here's what I mean. Here's the chart of Apple, weekly chart going back 3 years. Apple's upward trend was broken last summer. For the longer term investor, that was the signal to sell. And since that time, Apple has been grinding its way lower. For the long-term investor, you should not have been buying Apple over the last year or so, almost a year. However, for the shorter-term trader, there was an opportunity to buy Apple at the start of March when the downward trend had been broken, rising bottoms formed, and we had a break higher from a rising bottom. And over the course of 5 or 6 weeks, Apple went into a nice upward trend until it broke that trend in the middle of April. That was the signal to sell for the trader who trades that time frame. And of course, since then, we've had some pretty strong selling pressure in Apple. So that's the way you want to analyze charts. You want to keep the context of the type of trading you do in mind. All right, here's the first chart of the week. S&P 500 30-day 60-minute chart. You can see we are in a slight downward trend. A lot of chop. You can see a lot of up and down here. That shows the uncertainty of the market, but the sellers are winning, not dramatically so. We've got pretty good support down here, which means we should see a bounce back in the near term. However, if this line of support gets broken, we could see more weakness ahead. All of this makes sense because the longer term chart has been hitting resistance and bumping up against that for the last few weeks. Anytime there's a bit of strength, like we had at the start of this week, the sellers come in and sell into that. And so it's going to take some time for this market to break through that ceiling price. And it may not happen. We may roll over and retest the lows that have been hit a number of times. So we want to be very careful right now because this is an important turning point for the market where we could get another corrective action, probably a fairly swift one if it happens. So keep a close eye on whether we break that line of support that I showed on the last chart. Russell 2000, still falling tops. That means the sellers are in control. Downward trend line intact. Until we can break that downward trend line, you should be very cautious buying these stocks for the longer term anyway. And it looks like we could continue to move lower in this downward sloping channel. On the Canadian market, really a strong market for the last little while, but in the last couple of weeks, we've seen some profit taking, the market catching its breath a little bit. Oil strength has slowed, and that has probably hurt the Canadian market more than anything. Not really a negative chart in the short term. I would call this neutral, maybe slightly bearish. On the longer term chart, of course, we had the break of the downward trend, break up from a rising bottom. Now let's see if we can break up through that line of resistance. We just need to see some strength start to form. It was a little bit positive this week because we closed slightly above the open, but I still don't think there's any strong sign there to be bullish on Canadian stocks in the longer term just yet. The TSX Venture is a chart that's got great upward momentum, kind of overbought. It's gone up dramatically in the last little while, but no sign of weakness until we see this upward trend line get broken. I would remain bullish on those small cap TSX Venture stocks. On the Treasury bond market, which of course is a good indication of where future interest rates are going, we had some good strength this week. It seems to me that money is starting to look for a safe place to hide right now, but we haven't broken out of this little channel yet. We are close to that. If we can break to the upside, we may see bonds move up to those highs from January of 2015, which means interest rates go down. US dollar, a little bit of strength this week, but has not broken the downward trend line. So this remains a bearish chart, but we've had 2 weeks where there have been some strength in the US dollar, and that starts to weigh a little bit on the commodity sectors. Of course, gold made a nice break from a rising bottom 3 weeks ago, right there. We had a little bit of a pullback, starting to slow on the pullback. Wouldn't surprise me at all if we see this break to the upside in the near term. So that is a chart you really want to keep a close eye on, because we could get some more strength in gold. Now, oil was also strong this week. I wouldn't say significantly so, but it finished the week up. You can see we've got rising bottoms in the short term on oil. One thing that concerns me, however, is that the tops are not rising as quickly. This is a wedge pattern, and it shows that buyer momentum is diminishing. So although we've got some upward momentum in the short term, we need to see a catalyst that gets this market going again, because it feels like the buyer momentum is slowing, and that could resolve with a break of the upward trend line. For now, it's a slightly bullish chart, but watch for a break one way or the other to really give a clue of where the next leg of the trend is going to be. Our fear chart, the VXX ETF, which reflects the volatility index, of course, has been showing a little bit of action the last few weeks. Still hasn't really shown the kind of excitement that we've had in the past when there's been more significant corrections. So I don't think there's a ton of fear coming into the market, but it's starting to percolate, and that could be one of the reasons why money is moving into things like gold and into things like US Treasuries, looking for safe places to hide, and that could come before a more substantial correction in the market. I just want to give you some caution at this point. Stocks continue to struggle with that longer term resistance and should be carefully monitored for an acceleration of selling pressure. Gold strength shows some investors seeking safety. Same with the treasuries. Oil drifting higher, but they seem to need a catalyst for further buying as momentum is slowing. Fear is starting to increase, so watch closely. Short-term bearish on US stocks, long-term neutral. Same for Canadian stocks. Bullish long-term on gold, neutral. It's kind of stalled in the last little while. Neutral long-term on oil. Bullish short-term, but I'm not so excited about oil until I see a little bit of excitement in that market. Well, make sure you follow me on Twitter. Make sure you subscribe to my YouTube channel, stockscores.com. Have a great week in the market and trade well.